The ASX hits a 5-month high as investor confidence returns. More than 1 in 10 Australians are unable to pay a utility bill. And Facebook reaches 3 billion users, or 40% of the globe. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Friday, the 28th of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you're speaking today with Dr. Nicola Powell from Domain.
Yeah, sure am. We love talking to Nicola about house prices and what's going to happen across the capital cities and the regions in terms of houses as well as units. Domain came out this week with the June quarter price growth. They've also projected ongoing growth in house prices over the next little bit. Well worth a listen, that one.
Yeah, I love it because it really kind of gives some specific dollar figures on kind of how much was lost, how much has been regained, and Nicola does a great job of kind of picking out particular markets where some interesting things are happening. It is well worth a listen. It's coming up a bit later on. The main story this morning, though, Sean, the local share market is running hard, up 7% in the past 3 weeks, hitting another 5-month high yesterday.
In fact, the market is about 1% off its peak of February this year and only a couple of percent below its all-time high of August 2021. Commonwealth Bank and ANZ are at their highest levels since mid-February. Westpac and National Australia Bank are also higher through the past couple of weeks, but they're not quite back to those February levels. Notwithstanding a fall yesterday, Fortescue Metal Group is close to its highest level since mid-2021. BHP and Rio haven't been quite as strong. Healthcare giant CSL, which just for a number of years just couldn't put a foot wrong. Well, it's kind of been the outlier. It announced a disappointing outlook in June. It's suffered ever since, though it did actually end up a couple of percent yesterday. Telstra, the most widely held stock in the country, it's trading close to a 6-year high, though it isn't quite as where it was in mid-June, but it's still at levels, close to record levels. The retailers have been more mixed this year, but the standout have been the tech stocks. WiseTech Global is trading around an all-time high. REA Group is at an 18-month high. Same deal with accounting software company Xero. Now, its share price more than halved last year, but this year it's up 75%. Just a lot of confidence at the moment.
All right, Sean, fairly simple question. I don't know if there's a simple answer. Why?
There is no simple answer to that, of course.
Oh, okay. All right. Well, I better pick up the pen. Better start taking notes. I'm taking notes for the weekend edition tomorrow. So I'm planning on tackling some of these meaty topics. So get going. Give me my material, please.
Well, broadly, the market is driven by interest rates. And so I suppose that's where we should start. The likelihood that rate hikes are coming to an end is definitely supporting equities. A couple of reasons there. One, it shouldn't hurt earnings as much. I mean, if rates keep going up, that does hurt equities. Two, when you can put your money in a bank account and get 4%, then you actually want to get more if you're putting in a higher risk asset like equities. If rates have stopped rising, then you're not looking for quite as much, as high a return from equities as you might if rates were rising. So that's why rates are so important. Then certain sectors benefit from other things that happen in the global economy. Any support for the Chinese economy from Beijing tends to help the big iron ore miners. We have seen a bit of that this week in particular. What happens on Wall Street matters, particularly in the tech sector, and the big US tech companies done very, very well. Also, the banks should benefit from a higher interest rate environment. The fact that thus far there hasn't been a disastrous blowout in bad loans due to higher rates has encouraged investors, although the strong competition in the mortgage market in particular hasn't been quite as impressive. Global energy prices matter, particularly to the oil and gas players and the renewables companies, and consumer sentiment matters, especially to the discretionary companies. They hadn't done so well until about 2 weeks ago, and they've just taken off. All in all, the market has had a really good run. Now, we have earnings season kicking off properly next week. That's when we really find out if the optimism is well-founded.
Okay, so plenty goes into it. In that case, there is no simple answer. What about the local market specifically yesterday? What happened?
It kept its run going. It finished up 0.8% to 7,456 points. The real estate investment trusts did very well with the sub-index up 3.3%. That's a real jump for that sector. But there were really were plenty of winners across the bourse. Tech stocks did well. Discretionary companies, healthcare and telcos all outperformed. The underperformers tended to be the energy and materials companies. In corporate news, Rio Tinto's share price dropped 3%. That's after it reported late on Wednesday evening that its half-year profit fell by 34% on the back of weaker commodity prices. Fortescue says iron ore shipments reached the top end of guidance for the June quarter. That didn't prevent its share price from falling 3%. So, Michael, they shipped 48.9 million tonnes of iron ore in the June quarter. I mean, we've discussed this in the last couple of weeks. Just massive numbers.
It actually is. And you know what? I need to do a little bit of research to get an idea of what that actually looks like. Some of the numbers are just so big that they almost become a little bit, not meaningless, but it's hard to
Yeah, I agree.
Hard to imagine it.
Yeah. A couple of others worth mentioning. Megaport's share price jumped 14% after reaching the top end of its earnings guidance for the last financial year. It was the best of the top 200 yesterday. Worst was gold miner Regis. It was down 11% after outlining softer cost and production guidance for the year. And finally, ASX-listed fund manager GQG Group says it intends to submit a non-binding indicative proposal, i.e. make a bid, to acquire funds management group Pacific Current. Now, on Wednesday, Pacific Current was the subject of a $555 million bid from Regal Partners. So in that world of funds management, we have a bidding war on our hands.
The things I Google on this podcast, Sean, I'm currently Googling how much iron ore does a ship hold?
Yeah.
And
what's it say?
Oh, look, it varies. It does. Funnily enough, depending on the size of the ship. Who'd have thought? But there are some that carry a total of, for instance, 270,000 tons of iron ore.
270,000. So let's say we go 4 times that to make a million or thereabouts. And 48. So it's about 160 ships by the time you do the numbers. 160, 170 ships.
And apparently the largest ships in the iron ore kind of trade are a particular class of iron ore carriers with a capacity of 400,000 metric tons.
Wow.
They are big ships, but still, you would need a fair few of them to carry that much iron ore.
You would.
Long story short, you need a lot of ships.
Yeah.
You need a shipload. All right, international markets, what's happening?
Well, the big news yesterday was the US Federal Reserve's decision to lift the benchmark interest rate by 25 basis points. It's still worried about inflation. Rates in the US are now at their highest level in 16 years, the 11th rate hike in the last 12 meetings. The accompanying statement from the Fed left the door open for more rate rises. In commodity markets, oil prices are higher. Brent is trading around $83 a barrel. And Michael, anyone travelling overseas at any point soon might like to know that the Aussie dollar's up a bit, buying about 68 US cents.
We need a little siren that plays whenever your self-interest comes into this, Sean. You could just casually just mention the Aussie dollar, but no, of course, we just have to get this little gleeful note in your voice when it comes in because you want to remind us all that you're going on holidays.
Yeah.
How long till you go?
Oh, I don't know, 2 weeks. No,
just somewhere.
Actually, I'm having a short holiday, and then I'm coming back. Then I'm having a longer holiday, but the short holiday starts in about 2 weeks.
Oh, excellent. Well, I'm genuinely happy for you, Sean.
Yeah, I can feel it in your voice.
Yeah, it just radiates out of me, doesn't it? Anyway, we'll be back in a moment with the rest of the day's business news. Sean, Macquarie Group provided a June quarter trading update yesterday and warned of weaker trading conditions, sending its share price down more than 4%.
There are hiccups across the whole business. And remember, Macquarie is a massive global operation. It's got its fingers in many, many pies. The group's asset management arm was hit by less income from its investments in green energy projects. The commodities and global markets business suffered from less trading across power and gas. Now, that commodities and global markets business is a really big earner. It contributed last year about 57% of the group's profit. Macquarie Capital, the investment banking arm, it took in fewer fees in the June quarter, although income from credit investments rose. Macquarie's banking arm also went backwards ever so slightly. Chief Executive Officer Shamara Wickramanayaka said the short-term noise from higher interest rates and a global slowdown won't disrupt medium-term momentum.
Sean, you mentioned that there were hiccups right across the business. If there's time at the end of the program, I have an absolutely guaranteed, foolproof way of getting rid of hiccups. It's completely unrelated to business. That's why I say I'll do it at the end of the episode. I don't want to disrupt the flow of things, but it has never, ever failed, ever. And it's worth sticking around just for that. Now, moving on to wine exports. They've fallen 10% with lower demand for cheaper plonk from the US and United Kingdom, thanks to inflation and the economic slowdown.
The total value of shipped wine dropped to $1.87 billion for the 12 months to the end of June. That's down about 10%, according to government export and marketing group Wine Australia. The value of shipments to the UK fell 14%. Exports to the US declined 18%. They're our two biggest markets. Mostly it was cheaper end wine. The value of exports to mainland China dropped another 67%, though at about $8.1 million for the year. Who cares anymore? One bright spot was a big jump in sales to Hong Kong, which is now our third biggest market. Anyway, I was looking at this story, some really interesting facts about wine exports. So about 50% of wine produced in Australia is exported to 117 countries. There are more than 12,000 different products exported. So think of all the different labels on and types of wine, etc. And, Michael, the type of variety we sell overseas most is, this is your quiz for the day. What comes at number one?
Oh, can you give me clues? At red or white?
Number one, well, it's actually 1 and 2. The first is white. The second is red.
The first is white. I would have thought red would have won. Okay. I've got to readjust my thinking. Chardonnay.
Yes, well done. And the top red?
Oh, well, I don't know now.
Shiraz.
Oh,
Shiraz.
Okay. All right.
Yeah, and they're a long way in front of the rest. Cabernet Sauvignon was number 3, then Pinot Gris or Pinot Grigio was 4, and then Merlot. There you go.
Oh, there you go. You've taught me something. Good. Thank you. Sean, the Federal House of Representatives will shrink slightly, just a little bit of shrinkage from 151 members to 150 members.
The Australian Electoral Commission has had a look at population figures and it's redistributed federal divisions in New South Wales, Western Australia and Victoria. Based on the most recent population figures, Western Australia gains 1 seat. New South Wales and Victoria will both lose a seat. It means when the next federal election is contested, New South Wales will have 46 seats, Victoria 38, and Western Australia goes up to 16 seats in the lower house.
Energy prices are, quote, historically high, despite decreasing by nearly 60% since their peak in winter of last year, according to the Australian Energy Market Operator.
Managing Director Daniel Westerman said a real calming of the Australian energy market had occurred since the war in Ukraine exacerbated the global energy crisis in 2022, primarily because of a decline in coal prices. Along with cheaper coal, an increase in the availability of coal plants when required and more renewables entering the system, energy prices have fallen in Australia, he told the ABC. Of course, he was talking about a wholesale level. It'll still take some time to feed through to retail prices.
Yeah, and along those same lines, actually, Sean, more than 1 in 10 Australians were unable to pay a gas, water or electricity bill over the 3 months to June, with a similar proportion saying they missed a payment on their phone or internet due to financial pressures.
It's pretty scary when you're saying 1 in 10 Australians can't pay a bill. The proportion of households reporting trouble making ends meet when it came to utilities bills was 11 to 12%. Far above the 8% reported a year earlier, according to the latest financial hardship survey by major bank National Australia. Of course, bills have risen, so you'd expect that a little bit, but a jump from 8 to 12% is pretty significant. The NAB survey showed 9% of Australians missed a credit card payment in the June quarter versus 6% a year earlier. The proportion of those who failed to pay an insurance bill went from 5% to 8%. Very clear evidence that people are struggling to pay their bills.
Yeah, it's pretty disturbing. Finally, Sean, Victorian property developer John Woodman gained repeated, quote, privileged access to State Premier Daniel Andrews and his most senior ministers through donations to the Labor Party, according to Victoria's corruption watchdog.
The independent board-based Anti-Corruption Commission's Operation Sandon probe also found that Woodman funneled more than $1 million in secret payments to 2 Casey councillors in return for favourable planning decisions. IBAC's 308-page report, released yesterday after a 5-year inquiry, found evidence of improper conduct at state, and local government levels, exposing corruption risks in planning, political donations, lobbying and council governance, and called for new laws to strengthen anti-corruption controls in Victoria. According to The Australian, the watchdog has recommended stripping local councils of planning powers as part of a wholesale overhaul of Victoria's system, something Andrews has indicated will happen. Operation Sandon's final report does not make any adverse findings against the Premier, though it has given a damning assessment of a cash-for-access political culture. And just before we leave Victoria, Federal Defence Industry Minister Pat Conroy yesterday announced that the government has awarded Hanwha Defence, which is a South Korean company, Hanwha Defence Australia, a contract worth up to $7 billion to build 129 infantry fighting vehicles in Geelong. It is one of the largest projects ever for the Army.
All right, turning to international news now, a North Korean leader, Kim Jong-un, met with Russia's defense minister, Sergei Shoigu, giving him a tour of a defense expo featuring Pyongyang's banned ballistic missiles, as both sides pledged to boost ties.
Don't you love the fact that they actually do a tour of the missiles that are banned?
I know, it's pretty blatant, isn't it?
Yeah, I mean, I'm not sure it's a sign that it's so desperate times for Russia, but it sounds a bit that way. Shoigu handed Kim a letter from Russian President Vladimir Putin. Kim, in turn, thanked Putin for sending a military delegation led by Shoigu, adding the meeting deepened the strategic and traditional relations between North Korea and Russia. The Russian delegation and a Chinese delegation arrived in North Korea this week for the 70th anniversary of the end of the Korean War, celebrated in North Korea as Victory Day. That's according to Reuters. The groups are the first prominent public visitors to North Korea since the start of the pandemic.
Sean, Meta Platforms, the owner of Facebook and Instagram, has announced better than expected sales, saying it is succeeding in migrating advertisers to its new Reels short video feature.
Shares climbed 5% after the company reported higher than expected revenue and net income. The social media platform also said 3 billion people are now regularly checking Facebook. That's about 40% of the global population.
That is remarkable.
It is absolutely remarkable. Of course, the company's betting on Reels, which are short-form videos akin to TikTok, betting that they'll draw more attention to Facebook and Instagram.
Well, they've drawn you, haven't they? There's a few Reels featuring Sean Instagram Aylmer on the Fear and Greed Instagram account.
That's true. So until Reels came, I never looked at Facebook. So there you go. Or Instagram.
Yeah, now you're all over it. You can't keep yourself off it.
No. This year, Meta's been cutting thousands of jobs and teams in what Chief Executive Mark Zuckerberg calls the year of efficiency. There's a euphemism. It's helped the share price, though. It's more than doubled since the beginning of 2023. Meta's also been investing heavily in artificial intelligence, using the technology to make recommendations for both content and advertising more tailored to individual users.
I don't know if calling it the year of efficiency would make it any more palatable to those whose jobs are cut.
No, it's slightly condescending.
Yeah, a little bit. All right, now, Sean, up next is a Fear and Greed Daily interview. You're speaking with Dr. Nicola Powell from Domain.
All about house prices, unit prices, what happened in the June quarter, and more importantly for most of us, what she thinks will happen going forward.
It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Do you want to know how to get rid of hiccups, Sean?
Well, first I want to give a special shout out to Jackie. Her birthday today. My partner, Jackie.
Happy birthday, Jackie.
Yeah.
Are you treating her to anything special?
Yes, we're going out for dinner and the kids are doing something this morning and lots going on.
Oh, lovely.
Happy birthday, Jack. So, but what about in case she gets the hiccups?
Well, my gift to Jackie is this remedy for hiccups. It is actually a 2-person fix, and the first person, the hiccupper, has to stand there with one finger in each ear, so block their ears, and the other person has to get a glass of water and essentially a big glass of water, and you pour that glass of water into the other person's mouth, and they have to just drink it with their ears blocked. And so it's the combination of the fact that someone else is forcing you to drink water and having your ears blocked at the same time. It has never, ever failed. I know we can't give guarantees on this podcast, but I give a guarantee it will work.
How often do you and Sean do this? Or one of the kids with you?
Frequently. It's often the kids. And now the kids are so terrified of me doing it that actually the fear of it happening is enough to stop the hiccups. So it's a psychological thing as well.
Yeah, I think that might be it. I just keep imagining you two do it. I can't imagine Jackie and I doing that.
Oh, well, maybe experiment tonight for her birthday.
Oh, can we do the sign-off, please?
All right. Thank you very much, Sean.
Thanks, Michael.
It's Friday, the 28th of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.